Something is off, and you can feel it before the chart even loads. The silver market is flashing one message on the screen while quietly printing a completely different message inside the physical reports behind the curtain. And before we even get into the metal itself, I need to say something clearly, calmly, and with respect for your time. The John OG channel might get removed soon, not because anything wrong happened here, but because there are now too many imitation channels using the name John OG. They copy thumbnails, duplicate titles, mimic the style, and flood YouTube with lookalike uploads. When a platform's systems see dozens of accounts repeating the same name and branding, the algorithm sometimes starts treating that keyword like a spam signal. And when that happens, the automated hammer doesn't always hit the right target. Real creators can get caught in the crossfire while the clones keep multiplying. So the move here is not emotional and it's not desperate. It's simply risk management. A clean backup home is being built right now. A fresh identity that is harder to imitate, easier to verify, and much safer from automated confusion. That new channel is called Financial Capital. If you want to keep getting these data-first, reality-first market breakdowns, even if YouTube suddenly wipes the John OG channel during a spam cleanup sweep, subscribe to Financial Capital today. Think of it like moving your bullion from a crowded counterparty vault into a vault you personally control. Same mindset, same discipline, different container. Now let's talk about what is happening inside the silver market right now. Here's the number that should make you stop scrolling. 528,691,365.40 ounces. That is the ounces in trust figure printed in the iShares Silver Trust fact sheet as of December 31st, 2025. This is not a rumor. It is not a tweet. It is not a screenshot from social media. It is a formal documented number. And it matters because it tells you how much silver exposure the modern public can hold instantly through a paper wrapper with a single buy button. At the same time, the delivery grade metal system reports much smaller categories when you examine what is actually registered for delivery. That is where the real story begins. Because this conversation is not about whether silver is up or down today. This is about why silver can look cheap on the screen while still feeling tight in real-world supply channels. It is about why the same metal can trade like a speculative toy at 7:46 p.m. and behave like a strategic industrial resource at 3:10 a.m. It is about why the dollar can nudge the paper price lower, even while physical systems quietly document withdrawals. And it is about why most people who follow silver every day still do not fully understand how the gears connect behind the chart they are watching. At the time of this snapshot, Kiko's live silver page prints a bid around 84.62 and an ask around 84.87, showing a daily change near 1.17% with a range roughly between 83.02 and 89.54. In the same live chart section, gold shows a bid around 5,399.80 and an ask near 5,418, with its own range stretching between 5,130 and 5,224. Those numbers are what everyone sees. That is the billboard. That is the surface temperature reading that gets screenshotted, shared, and debated before anyone asks what is actually underneath it. And here is what most people are never taught. Silver does not have one price. It has layers, spot quotes, futures contracts, ETF exposure, physical premiums, warehouse inventory categories, vault reporting cycles, different timestamps, different rules, different mechanisms. If you mix those layers together like they are identical, the market will always feel like it is lying to you. But it isn't lying. It is speaking a language most people were never taught to read. Let's simplify it. Paper silver is the price you can click. Physical silver is the metal that must be mined, refined, transported, fabricated, and delivered. Those two are connected, but they are not identical twins. They are more like siblings forced to share the same reputation. One moves at the speed of a keystroke, the other moves at the speed of a forklift. Now shift into the futures arena, because this is where silver can move like a knife. The May 2026 COMEX Silver Futures snapshot shows a last price around 84.92, down roughly 0.72% during the session, with open interest sitting near 78,474 contracts. That open interest number matters because it tells you the arena is full. A full arena can cheer. A full arena can panic. And when panic hits, the exits suddenly become very small. Every one of those contracts represents a position. Every position represents a bet, and every bet has two sides. When sentiment shifts, liquidation pressure does not politely line up and leave in single file. It stampedes, and that stampede can move the price somewhere that has nothing to do with what is sitting inside a vault. Now add the dollar to the picture, because metals live inside the dollar's shadow. The ICE US dollar index snapshot shows 99.45, up roughly 0.23%. Not a huge move. But in a leveraged market, you do not need a huge move, you just need a catalyst. The dollar acts like an invisible gravity field around every asset priced in it. When that gravity strengthens even slightly, everything denominated against it suddenly feels heavier. And that leads to the first simple truth the audience needs to understand. A strengthening dollar can push paper silver down quickly, even if nothing about the physical metal actually changed that day. When that happens, the narrative becomes dangerous, because people start assuming the real-world supply system must be loosening too. When that happens, the narrative becomes dangerous, because people start assuming the real-world supply system must be loosening too. Sometimes it is, sometimes it is not. And the difference between those two realities is the difference between reacting emotionally and thinking strategically. Now we go behind the curtain. Comics warehouse reporting. This is where vibes stop and categories begin. The CME Silver Depository Report, dated March 11th, 2026, with an activity date of March 10th, lists roughly registered silver 347,162 ounces. Eligible silver 266 long, 94th, 339 ounces. Combined total 344,541 or 801 ounces. Here is the key distinction. Registered silver is metal that has been warranted and prepared for delivery through the exchange. Eligible silver meets the specifications, but is not currently registered for delivery. Both exist, both are real. But only one category carries the psychological weight of available right now. And then the report prints something worth noticing. Withdrawn. 768,740.67 ounces on that activity date. That does not automatically mean shortage. Withdrawals happen, metal moves, categories shift. Accounting adjustments occur, but patterns matter. Single days become trends when they repeat, and the key point is this. Paper silver can fall because the dollar rises, while the physical system simultaneously shows metal leaving specific pathways.